Thank you very much. Well, as the dog days of summer approach, I think we're already in them. Our next guest says you should relax and take advantage of tariff fears and, well, buy some beaten-up asset classes. Portfolio Wealth Advisors President and CIO Lee Munson joins us now. Lee, great to see you. So which of the asset classes have been beaten up the most, Lee?
Well, what I really like is I love emerging markets that have done, really did pretty well at the beginning of the year. They're down almost 15% from the January highs. I think you can buy them right now. A lot of what's happened with that asset class is that the dollar has strengthened all of a sudden. And granted, we've got a lot of problems in China. If it's not a trade war, then there's some analysts talking about their big debt. But again, the emerging market index, China's only a small part of it. Second thing is what we call the EFA index, in that's sort of the trader lingo, but it's all the rich countries not including the U.S. So basically Europe, Japan, Australia, Canada, things like that. That's down almost 10% this summer. Again, on a lot of trade concerns. We have this idea that global growth can't be synced anymore if we have tariffs. And then, like we've been talking about, the banks are in. They've just been simply overlooked, Ashley, for the FANG stocks. And so I think if you want to look at some things with solid earnings that actually are expanding their loan book and doing more business and making something called profits, then that's where you're going to find your action.
You know, it's funny, no matter what you want to say about big tech, that's where the money's been going for years now. And people say, well, that's made the whole thing a bit unbalanced because so few stocks are pulling so many along with them. What's your thought on that? Is there something underlying that's not as healthy as we think?
I think so. I've seen this before. I've been doing this for over 20 years. This reminds me a lot of 1999. Now, 1999, actually, that was a great year.
Yeah.
The NASDAQ, doubled that year. But remember, here's the first thing. That FANG acronym, it's getting more letters in it, right? And then we're getting the BAT part of it as well. When you hear places like Netflix or just insert some big name, say, well, we're going to start growing internationally, and that's where we're going to have this huge growth. Doesn't that remind us of Cisco Systems, 20 years ago, saying every little child in India is going to be on the internet in a few years? It reminds me of Tower Records saying we're going to sell the snot out of South America, or Coca-Cola saying everybody on the planet is going to have to drink 5 Cokes a day. So I think that if you have a noisy market like we do now, and we have a range, we're not higher than the January highs, and we certainly haven't gone lower than the February lows. I think that you just let those people put the money into the FANG stocks. Good luck to you.
That's where the
I would
growth
rather
is.
buy something with actual earnings.
We'll have to leave it right there. Great stuff as always. Lee Munson, thank you so much, Lee. By the way, stocks ending the session, as you can see, just slightly lower, but for the week, the Dow, the S&P posting their third straight weekly wins. That's it for the countdown. Now